Alright, hope everyone's having a great day, or a great morning in this case for people in the US. So anyways, I'm done trading for the day. I actually have to, there's some other things I need to do, so I'm going to just make a video now that I've got a little bit of free time. And so yeah, let's get to it. So anyways, did not make a video. I may have on Thursday, or excuse me, Friday, but I don't remember what I said, so I want to go ahead and just kind of look more into that. So we've had a lot of, kind of gets to how I want it, had a lot of spiking channels, broad bear channel kind of price action, and in part that's because of, over here the market was deciding, bull breakout because of the Fed bar, we had a gap, we started going sideways, got a double top here, sold off, and then we got a second leg down. So we're starting to form, arguably lower highs and lower lows. And then we started getting lower highs, and we got another rare breakout sideways, and then we just kind of channeled down, and we got the strong rally to the upside. So let's first look at Friday, or we'll look at Thursday first. Thursday we gapped up, and I'm working on making a blog about this. It's just not finished yet, but I'll go ahead and talk about it. A lot of times when you get the breakout, a breakout is a spike, gap, climax, or trend bar. So, for example, if we look at the 22nd on this open, and we look at the cash index, we will see that the 22nd looks like this. It's a big trend bar. So what you have to understand is simply buying above bar 1, it's not the breakout's all this whole thing. So it's a pretty strong move up. So this selling below this bar is lower probability than you would think. Now, if you were to sell below bar 2 and sell more above bar 2 and then stop up here, your math's pretty decent, and you can see a lot of traders probably did that. So, that's why a lot of always in traders, if they bought above bar 1, they're probably going to hold below bar 1 and probably get out on the low too short, because most breakouts have second legs in the minimum, and here's our second leg up. Double bottom. So our two-legged pullback, leg 1, pullback, leg 2. Bulls buy again, but then we're at the top of the trading range, and then we clearly got disappointment. Bears get out below this bar. Then we sell off to the moving average. Clearly always in short. Maybe bears start selling over here, but not really all that clear. If you weren't short by somewhere around here, I certainly would not sell at the moving average, because that's where bulls will probably buy. Do bulls buy above this bar? I would not, but I think they get long. Bears certainly get out of long shorts here. Bulls go long. And then where do they get out? Well, probably on this bar. Tight channel, first breakout below the channel should fail, and then we got it. We got the pullback, we went back up, and we found profit takers. So I'd probably get out of longs there. And how do you get short? Well, that's tricky. If you're quick, you sell during this bar, but otherwise, you're selling a wedge bottom, 3 pushes down, 1, 2, 3, so it's a wedge bear flag. And then when you get the bad follow through, it's a problem. So yeah, and so at that point, if a bear is short, they certainly get out above this bar. Bulls probably consider buying, or they buy below this bar. Do they get out below here? I would not get out below here. I think it's more so sellers selling this high and selling this high for a scalp. First strong enough breakout, first reversal down should fail, and we got that, and that's pretty much the end of the day. I think bulls get out over here, not worth shorting. And then Friday, always in long from bar 1, okay to buy, but you're at yesterday's low, so kind of how I see it, tight enough channel, probably sideways most likely. So with that said, you can see a couple things here. Bulls who bought above bar 1 here never got a chance to get out break even on bar 3. They buy bar 1, disappoint at bar 2, try to get out break even on bar 3. And I just wanted to check something in the other market, in today's market, the Emini. So they never got a chance to get out, and then we sell off. And they probably buy more here, and then they get out at break even. So a lot of times, you've heard Al talk about it, kind of like over here. Buy the close, buy the close. You got to buy the close bar, and the market doesn't let you out. And then it just sells off. Well, more often than not, it will test back up pretty much to that close. And this is something I just noticed. So I'm just going to put this, I'm going to move this line to the close. Here's the close. You notice on here, you never were able to buy this close unless you somehow happen to buy during this bar, buy this price level, and then the market tick up as it did and go back down. You probably never bought the close. You probably never got in at this price level. So more likely than not, traders who bought the close of this bar probably got filled, I'd say over here, because this bar opened down here. And if they tried to buy this close, they probably never got filled. So this is probably more of their actual entry price. So if they got filled on this open, price sells off, it never let them out, sells off, gets close to it, finally hits it and lets them out. So I don't want to go too far with that. So anyways, if I would buy, I'd use the wide stop. 3 bars down, but not enough to make it clear they're always in short. I'd wait for a bear breakout and just hold short. And then what do? Well, is it always in short here? Probably not. I think this made it very clear. Always, when I'm trading always in, I'm always looking for the best buy signal bar. So that's one way to help. So far on bar 1, bulls had the best buy signal bar compared to bar 2. Then bulls clearly had the best buy signal here. Second entry is short, but I wouldn't take it. I think we're gonna get back to this high, and I'd rather sell at the moving average. Then we get to the moving average, we sell off, and then we sell off again. So it's kind of a low 4. You get a low 1, low 2, bull breakout, low 3, and low 4. So it's a top. We got a bull breakout, a bear top here, low 1, low 2, bull breakout. Then we got another top. So I think good signal bar, it probably goes always in short below this bar. So I think bulls certainly get out. And then what do? Well, Al talked about this in the room, but they're not really clear to get out of here. So I think a lot of bears would stay short, stop above here. Stop above the signal bar right here at 1010. And you can see it tested it, but never went above it. Then we sold off sharply. Then we have a micro double bottom, down up. Down up, down up. And it's second entry buy. Probably at the bottom of the trading range, so it's an okay buy. Certainly get out of the shorts. A lot of traders, what would they do? Would they buy up here? I would not. I think that it's already close to the moving average, and more bears probably sell at the moving average than buy. So sorry, I keep yawning. I have to say I'm a little tired, but anyways. So if the bear got out above here, they probably have to get short again below bear bar, such as this bar, maybe below here. I would not get short below this bar, even though it never let you. You're at the bottom of, the channel, trading range, whatever you want to call it. So bears are short for sure here, for sure on this close or this low. And then where do they get out? They get out here? Probably not. They probably get out above this bar. It's kind of parabolic in nature. It's leg 1, pull back leg 2, 3 pushes down, 1, 2, and 3. So, we're at the 60-minute moving average. We're at there's a lot of support over here. I'm not going to point it all out. But and we've got room to the moving average. So aggressive bulls buy, test the moving average. Do bears sell here? Yeah, that's kind of tricky. I think I would not. I think climactic, so expect 2 legs up. I think it's better to hold. And maybe bulls get out of longs below this bar, but they certainly get out below here. We tried to test the open of the day, we couldn't do it. We tested the August 2nd trading range. No, excuse me, we tested the open of September. And yeah, we tried to test the open of September, didn't quite get there. And then we got this bull breakout, clearly always in long, but again, you're at kind of resistance. Trading range day, so you have an upper trading range, bear breakout. And then usually you test back in the upper trading range and kind of form a larger trading range. It's kind of the adage on Wall Street. Al talked about this yesterday as well, where when you get, say, when you get a trading range and then you get a breakout of a trading range and then the breakout forms another trading range, usually price gets sucked back into the first trading range. And that's basically a trading range. So anyways, what do bulls buy up here? I would not. I think it's really aggressive, and I think it's really dangerous to buy up there. It's late in the day. And, probably sellers will win. You got to ask what's in it for the bears or what's in it for the bulls. The bears see its second leg up, and we may test down, and, it's probably a minor reversal. So we're part of the major trend reversal. So you got a bear trend line break. We'll probably need to test down. And then yesterday, always in, big gap down, always in short in the open. Do bears sell? Maybe bears sell this close or this close. But if they sell here, they probably got to get out of here. It's okay to buy. Betting on a test of the moving average and opening reversal. Then when you see this, when we're getting close to moving average and a sell-off, maybe all bears get out. Always in short, bears get out. Or excuse me, always in long, bulls get out below here or below here. I think certainly below this bar. I think bears, it's back to short below here. So bears sell. And then, where do they get out? I think it's okay to get out above this bar here. I get it. Tight enough channel. Trend line break, probably second leg down, but you're at the bottom of the range. Trading range day, better to take profits at the bottom than hold short. So you either get out below here or you definitely get out below this bar, above this bar. So get out above here for the bears or this bar. It's okay to probably buy above this second entry buy at 11 o'clock. And then, what do you do here? Do you get out of shorts here? Well, I would not. Trading range day usually have deep pullbacks, and we're possibly in a broad bear channel. So if we are, then we may test up to a 50% pullback, which is what we did. I think bulls definitely get out, bears get short here or on this close. You can see a lot of bears sold during this bar. And then again, same thing. We just made a new low on the day, so better to look to buy down here over take profits. Price never triggered above this bar. I'd get out above this high. Would I go long? I would not. I think it's okay to buy, but if I'm buying, I'm gonna buy and risk maybe 4 points to the downside, and I really don't like doing that. So I just wait for second entry buy or a strong breakout. And never really got a good place to buy. So the next thing I would do is, again, I think it's okay to buy, but I would not get out below this bar. The next thing to do is sell below this bar. It's around the 50% pullback here to here. So I think it's, you're in the selling zone. So I'd sell, stop up here. And then, what do you do here? I think bulls get out. I think bears get out above this bar. It's aggressive to buy, but it's okay to buy. Yeah, would I buy above it? I don't know. I might, but again, I think it's okay to buy if you use the wide stop. So probably okay to buy. But if you do buy, sorry about that, I keep yawning. If you do buy above, I think bulls get out below. Maybe aggressive bears sell. Certainly okay to sell above moving average. And then, you know, what time is it? We're late in the day, pretty much in the day. And then today, what do? Well, spike and channel bulls, so spike and channel bears, so you've got to think about channels, probably get a bull breakout, convert into a trading range. And overnight, we had a pretty strong rally, as you can see over here. Strong rally. You know, everyone's going to tell you it's because of the, it's because of the presidential debate we had last night and all this, but kind of the way I see it is, number one, strong breakout. You know, we had a micro channel. It'd be easier to see on the, here, let's go to the, yeah, we had a strong, you know, consecutive 9-bar micro channel. First reversal down should fail, and we had a pretty decent rally to the upside, somewhat. So I think we're trying to test back up to this low down up here. So anyways, we already tested back down before the open. Then we get bar 1. It's an okay buy above bar 1, putting your stop below bar 1. That's the only trade I would take. Probably, you know, yes, it's always in short, but bear breakout below a bear channel, probably going to fail. So it's certainly okay to buy above bar 1. Other traders wait and buy bar 2, or buy the low of 3, or the 3 close. And it's clearly always in long. You know, bears get out below here. And at this point, we're starting to go sideways. I think that we're forming a trading range channel. So here's the channel, the start of the trading range. And when we look back, we'll see this is the start of this range. I think we'll get up to this high. But, you know, as impressive as this rally is, there's problems. There's a lot of tails. There's not consecutive strong bull bars. So sorry. So if it had to be long or short, I'd be long, but stop placement's a problem. At a minimum, I'll put my stop down here. But then again, that's risking a decent amount. So, and you can see what happened at this close at 47 even on this last bull close. Price went to 46.75, so you have bought the close bulls trying to get out. Alright, that's all the time I have. Comment below if you have any questions. I'd love to answer them. And hope everyone has a great rest of the trading day. Thank you.